So all y'all that I told to buy a house like in Q4 last year, I told you so.
Hey y'all, Katie here with Team Evo AZ, and welcome to the Arizona Monthly Market Housing Update with Matt and Katie, where you learn all about the greater Phoenix area housing market, including information on interest rates, what's happening with housing prices, and tips and tricks for buyers and sellers. Please like, subscribe, and download our episode so that we can continue to get this real news out to the real people.
Hey everybody, it's Katie and
Matt. Well,
and we are that real estate couple that is here once a month talking a lot about real estate, a little bit about life with our very favorite recurring guest. He's with us every month and we love it. Ryan Gilliam with Waterstone Mortgage. Woo!
Thank you. Thanks for having me, and happy New Year. Can we still say that now on this late in the January?
yeah, I think so.
I think
it's
only 19
applicable.
days in.
Yeah, for sure. And this is our first official one of the new year. So
Absolutely.
right. I think definitely.
So happy 2023, y'all. Let's kick it off with rates, Rye Guy. What do we got?
Yeah, earlier this month, I was listening to a few industry experts about their market predictions. I'm getting a lot of questions about this for 2023. And a lot of them are predicting the same thing. So I wanted to report that to everybody exactly what they're saying. That they are predicting that inflation will continue to drop. As the Federal Reserve is continuing to tighten things and not really letting off on that because they're getting really tough on inflation. They want to do everything they can to drop it as quickly as they can. And it's working. We're finally starting to see the fruits of what they've been doing since last July when they kind of started increasing the funds rate. So and I know, Katie, you mentioned this on one of your recordings from an update that I sent out that, the consumer price index, which is the Fed's favorite measure of inflation, it's reflecting this. It went down from 7.1 to 6.5%. So it's a pretty big drop.
Pretty big, yeah.
In inflation. Yeah. So like we said in this podcast before, or if you're new listening here, rule of thumb is when inflation goes down, mortgage rates go down with it. So it's a good thing that we're starting to see these go down because rates have followed suit. We saw a peak around November, and that was, we saw conventional rates almost at 7.25 at that time. And now they've almost dropped about 1% to about 6.25. And a lot of people are predicting they may go down another % sometime this year to be maybe in the low fives is where predictions are. And that's good. Historically, that's a very competitive interest rate. So that's kind of where they want it to be. And that would be a healthy rate for this market. And as rates continue to drop, they do really feel like, that's going to shift demand because a lot of people were on hold, obviously, as rates were jumping so fast last year. And we're already starting to see that ourselves. I'm guessing you guys, like we've talked about, are kind of seeing that as well.
Oh my goodness. Yeah. I mean, January just came in with a bang, I will tell you. We're getting a ton of activity, ton of online leads coming in, a lot of people from out of town. In fact, I right now am sitting on 2 out of town buyers that I have scheduled that are coming out here in the coming days to look at property. One of them has never been here. They're just super excited about moving out. So yeah, they're moving, they're talking rates too. This guy he's got properties all over the country. And so we were talking rates, and we were talking about the rate buy down. So real quick, if you could, what are you seeing in terms of buy downs? Are you still seeing them happen? And now that the rates have dropped, pretty significantly, like you said, about a point since, November, where are we buying down to at this point?
Yeah, we're still seeing quite a bit of seller concessions or seller pay closing costs. And what a lot of our buyers are doing is they're using that towards buying down the interest rate. So I know we've talked about it before. There's a really unique program called that 2-1 buy down, where the first year that you have your mortgage, your rate is 2% less than the market. So right now, we do have some people at a 4.125 the first year of their mortgage. And then the next year it goes up to a 5.125. But a lot of people are predicting they're going to refinance between those kind of adjustments. I know we talked about that once. It's a great program, and we're still seeing a lot of people take advantage of it. But even if you don't want to do that, if you just want to lock in at a low fixed rate using seller concessions or just buying it down on your own, we do have a lot of people buying their interest rates down to something in the low fives right now, and making their payment a lot more affordable. So it's incredible how far we've come since November that we're talking about rates in the fives again right now with a little bit of a buy down. So it's pretty exciting.
Yeah,
Yeah,
absolutely.
definitely.
And statistics that came out just recently are actually kind of mind blowing. So I would like to share that and then share kind of our experience, boots on ground and how we're seeing that in our business. December sales were up 4.8% month over month. So quite a bit. New inventory, meaning new property coming onto the market, down 22.3%.
Wow.
And I know we've really been seeing that. Matt and I have really been tracking that because, of course, inventory plays a huge role in the market. Total inventory down 9.9%. Month supply down from 4.43 months to 3.81. That's month over month. And then some really cool statistic that I thought was pretty interesting is 2022 was our second highest in sales volume per armless in the last 22 years. And we did nearly $46 billion worth of sales last year.
Wow.
So quite a big number.
Wow.
Huge. Wow.
Yeah, that's huge. And I think you said it, inventory is, I wouldn't want to say the elephant in the room, but it's the one thing I think everyone kind of wants to talk about, doesn't want to talk about, because rates are, I think, at the forefront of everyone's predictions on what's driving this market, what's really preventing buyers from buying, what's, kind of giving us that blanket over all of our intentions. And I think inventory is really going to peak its head up the second we start to see, these rates, especially if we dip into fives. I think if we start to see a 5 before that rate, and before that number, which is what, 2 basis points away, Ryan?
We're close.
We're really close. So, I'm very, very, very excited to see how that rolls and how we manage that, because as you said, look how much inventory we've dropped. We've been talking about this for months now and really saying, hey, we need to look at this. And sure enough, by my how I monitor is just actual what's available in Maricopa and Pinal County, and we're now close to 30% decrease from where we were at in late October of 2022, which is crazy. That's like 90 days ago.
Yeah. It's huge. And then another thing that the Armless report had on it that I thought was really, really cool, and I'm going to show you guys a quick slide here. Those of you that are listening to the audio version, I'll read it. But this is something that we have been talking about, guys, right? Like 2023, what is, how's the market going to be in 2023? What's our prediction? And we keep saying, if the mortgage rates go down, we're going to really see some movement. And that's what Armless said too. They said, looking forward, how our market evolves in 2023 will be determined by 3 metrics: mortgage rates, and mortgage rates.
What's funny?
I have to agree with that, Matt.
Yeah, and we've seen it. Once the rates changed, our buyers just started hopping the fence.
Yeah. And I think, once again, I do personally think maybe that middle one should be inventory. Because once again, that's the biggest player. I think nationally, obviously, they're saying, hey, interest rates. But here in Phoenix, we got such a unique situation. And I really do believe now, reflecting and looking at how we kind of pumped the brakes, did a very comfortable reset in the second half of 2022. It was natural and needed. And when we look back upon it, you really see how we were kind of one of the first in the country to do this correction. I think there's going to be a lot of areas in the country that are going to kind of maybe experience this. And that I do believe that was because we were very, very saturated with investors. And we not only got hit by the brakes of the regular consumer stopping from purchasing, but then we ultimately had, a huge portion of our market, which was investors, and they literally exited the building all at once in one day. It was crazy. So I think it just, yeah.
Very, very true. Q3 to Q4 purchases for institutional and iBuyers is a significant difference. And we can see how they really blew up our market over 2021. If you look at the statistics and how many homes they were buying, especially during like the summer of 2021, right? It's just, you're exactly right. It's changed significantly as far as their buying is concerned. I'm not seeing it nearly as much. And then it's reflected in the statistics too.
Well, they were their own worst enemies. You know, I mean, at the end of the day, when it really changed from what the goal here was originally from a lot of investors' standpoint, it was, you know, it was cash flow, it was appreciation. But then you get these big players when we had Zillow and Opendoor competing for market share.
Right.
And the second they start doing that, that's artificial. It has nothing to do with the asset. It has nothing to do with the market. It has to do with them competing against each other. And that was at the end of 2021. I mean, 2021 going into 2022. And then
Correct.
that's when ultimately Zillow says, you know what, hey, we're going to change everything up by deciding we're going to walk away from, was it like $50 billion or $500 million loss. And we are no longer in this arena of iBuying. Opendoor was like stuck with smiling, but at the same time going, oh shit.
They had the market share.
Yeah. And now look who's, you know, ultimately eating, just in Phoenix alone, I think it was close to $50 million in losses from what they held and trying to exit from. So I think that's good. It also was very cleansing to our market as far as local investors, which is, we've talked about in the past, and how our wholesale market was flipped upside down by these iBuyers because they ultimately came in as the final destination of these investors' pickups as wholesales. Before, they'd have to go to their own book of business. But for the last 3 years, they didn't go to that book of business. They just went to these big hedge funds and said, hey, we have someone that's that. Will you buy it? Great. So they abandoned their business models. And then boom, the second these big dogs said, we're not buying anymore, everyone's going, shit, who do we sell to? And then all these other local investors are like, sorry, we're out. And that's what we're seeing. And to what you were saying, the second these buyers jump on, you got to be certain these investors are ready. And we're seeing it. You know, there's already more investor activity in the last, 20 days than, what we saw, going towards the end of the year. And that's not typical. Usually investors pick up at the end of the year because that's when the good deals are to be had.
Exactly.
And so, and I think that goes into what you were saying earlier, that we might have seen our bottom. Not saying that's the case, not saying that there's going to be other things that might make us see further dips, for further lulls, maybe even give us the spiritual feeling that it's going lower, but at night might not be in certain areas of Phoenix. But I'm thinking that in certain parts of Phoenix, we might have seen those lows.
Armless is already reporting changes, and they're reporting increases in average price point. Yeah.
Yeah. And just personally ourselves, we've seen kind of a shift, like a power shift, like last quarter, buyers really were in the driver's seat, and they were making really low ball offers and asking for seller pay closing costs and getting them.
Yep.
We saw some amazing deals with some of our buyers as things were slower and rates were higher. But over the past month, we've kind of seen that shift where we've had buyers out there, putting an offer on a house, but getting it rejected, and the actual winning offer was over asking price. And we're like, oh, what happened? Just a couple months. And then it seemed like it shifted back. And now the sellers are kind of in control. Like you said, Matt, inventory, I think that's a big part of it, since we've seen such a dip in inventory and with rates improving, we kind of see things shifting back. It's interesting.
Absolutely. Yeah, I mean, just specifically to our business, what has happened this year, I'm going to use 2 examples. Listed 2 properties after the first of the year. One of them we listed on a Thursday. Actually, both of them we listed on a Thursday, and both were under contract by Monday with multiple offers, tons of showings. That wasn't happening the last 6 months. That's starting to happen now. So all y'all that I told to buy a house like in Q4 last year, I told you so.
She told you.
I told you.
I hear that probably 4 to 5 times a day.
Well, you should listen.
You tell me all the time. I try to, anyways, but you're right. But I also think that's even more reason to kind of really put your eyes on what's happening. If you are planning or knowing that you have to enter this market. The other interesting thing is I think we were kind of, what we were looking at as far as our inventory went, especially from when we reported our highs in October towards the end of the year, it was all the same inventory. Stuff that was being added was very, very small. And the stuff that was being added was either in the bucket of desperate because, hey, we're listing in the middle of the freaking holidays and we got something going on in life that we will take this low ball. Or they fall in that other bucket that it's a turnkey home and they're like, we got to move. Things are good and we just have to do this. And we know how those 2 buckets respond, where if it's a turnkey home in this market, and even 2 months ago, if it's turnkey, it's good, it's got designs that people want, you now have the attention of the people that are like, hey, we're willing to pay. We don't want to deal with any type of remodeling, and we want to do this quick. And those people are willing to pay at price and above. And that's where we saw competition, multiple offers. Well, this whole kind of, well, it's not even say shadow inventory, but this inventory that's been sitting, making our days on markets, the stuff that's just no one wants, not even investors
No one
over
wants
the
because
last
it's
6
overpriced
months,
or whatever. Yeah.
that's still sitting there. And it's kind of this, like, it's almost fake. It's giving us this almost, it's artificially kind of pumping up our volume to seem like there's more on the market than there is. And we're seeing that everything that's being newly added right now, it's people that have been preparing, and it's on their terms as a seller, and they're getting multiple offers, and we're seeing this, and they're not giving it away right off the bat. So hats off to them too, because they're ultimately controlling our market to the extent that they're not fear selling, which
Yeah.
is very, very important.
Totally agree.
So
How do
yeah,
you
so but
feel?
that, go ahead, sorry.
No, I didn't mean to cut you off. Go.
No, and ultimately what I was saying, and that's how this thing could turn on a dime.
Mhm.
Because ultimately these buyers, like we're saying, there's two pools of buyers that have been kind of kipping their toes in the markets. It's these buyers that have to buy and have the money to buy because they're moving here because of job or something positive in life. Those people really aren't looking for getting a good deal, isn't on the forefront of their motivation. It's more of getting what they want, making this quick, making this efficient, and they'll pay money for that. Then you have the other bucket, which is the people that are like, we are only doing this to get a good deal. And they're the ones that are looking into, stick it in and twist and get the best deal. And what ends up happening is the ones to fill the latter bucket, the ones that are looking for the good deal, those opportunities are shrinking.
Yeah.
And I think the second that people start to realize that and the buyers jump in, it's going to turn quick. We're going to see inventory drop very fast.
Totally agree. And now, you had said something the other day on your podcast about the Phoenix Open and the Super Bowl coming. You want to speak about that a little bit?
And I think this is very, very important, because this is this ingredient that, here we are, a very unique state when it comes to real estate, our market, and our economy. We've kind of been a focal point as being the leaders and the ones to take the biggest adjustment when the rates went up. And now here we are we are having our Phoenix Open, which starts on it's February 6th. And we're talking one of the biggest opens, golf tournaments in the country, in the world. Most publicity. It's the Happy Gilmore tournament, where people are just coming out of the groves with their beer helmets on, and they're just ready to party. It's insane. It's like 150,000 people come to this thing in just one day. I think it was on Saturdays. But the big thing is we have Super Bowl. So we also have Super Bowl coming here in Arizona, in Glendale. So that's happening on the 12th. So the final day of this Open, we are going to have 100,000 plus people in Scottsdale, hung over from a week of drinking, watching people rolling on the 18th. At the same time, Super Bowl's being kicked off 20 miles away in Glendale. We are going to be the focus of the world for a little bit when it comes to the sports world.
Agreed.
We're talking about a bunch of big money between golf and Super Bowl. We have a lot of people that are going to be coming here. And I can guarantee the people that are coming here for this week of this, there's going to be a lot of them that didn't even have looking at real estate on their radar, and they will be looking at real estate. And I guarantee there's a big portion of them that are coming here and saying, we're going to be looking at real estate.
Yeah.
One more thing to kind of contribute to inventory. These people really aren't concerned about rates. They're more of like, hey, the future, we want to do this. We like this. All those perfect ingredients could really, really make inventory drop quickly. Yeah. And I think it's going to be very good for the longevity of Arizona. It's going to really highlight a lot of stuff. So this is some big stuff happening. Your thoughts, Ryan?
Yeah, no, I completely agree. We got so much coming up, and of course, spring training. We always seem to see things pick up during spring training. When we got the Cubs here, And I have so many people from Illinois for some reason that buy second homes out here. So it's kind of funny. We always see an uptick around, early spring, like the March and April. And I think that's going to shift maybe a little bit earlier, like you were saying, Matt, with the Phoenix Open and the Super Bowl. So it should be pretty busy the next few months, I feel.
Oh, yeah. It's funny because one of our listings that we have is actually right across from, is it Sloan or what is it?
It's Sloan. It's right across from
yeah.
Cubs Stadium. And that's one of the ones I used as an example that we listed on Thursday, and we were under contract. We had multiple offers. We were under contract with a cash buyer on Monday. And that was 2 weeks ago. We close tomorrow.
Yeah.
Awesome.
So it's funny that you mentioned the Cubs.
We're literally getting this engine, kick-started hard with the Open, with Barrett Jackson, which is, I think, happening now, going into the Open, going into Super Bowl, and then here we are stretching our legs into spring training and all the wonderfulness with weather and everything else that happens. So this is going to turn quickly. So yeah, if you're buyers out there, get ready. Sellers, get prepared. I also talked about this on my podcast earlier on what sellers can do for markets like this and how to prepare to get the most money and to kind of have the right mindset going into these markets. So you're not going crazy, because any seller that's trying to pick and choose when they're going to sell because they have the luxury to do that, they must feel a little bipolar. We've done such a freaking quick change here in the last 12 months. It's crazy. So
that's true. Armless reported on that too, just how we pretty much saw it all in 1 year. It's kind of crazy. For those of you that would like to check out Matt's podcast, you can head on over to our YouTube channel. It is at Team EvoAZ. That's our handle. Just scroll down. You see a bunch of playlists. The first one is the one that you are probably on right now, and that is our monthly market update. If you are more the audio version, maybe a run a lot, maybe a drive a lot, and you want to check out our podcast channel, just look up Arizona Real Estate Radio on your favorite podcast platform, and you will catch all of the shows there. Do a quick download or a subscribe. I guess it's called subscribe, and you will be notified of our shows as soon as they hit. All right, guys. Thank you so much. Until next time.
Thanks, everyone.
Thanks, Ryan. Bye, everybody.
Thanks, Matt. Thanks, Katie. Thanks for tuning in, everyone.
Absolutely. Happy New Year.
Happy New Year.